Then for the day, Shree Cement fell 2% after lower realizations and higher costs hurt the company in the second quarter. Nigel is here to take us through the key numbers and the highlights. Nigel.
But let's start off with Shree Cement then. Those numbers were clearly disappointing. On the top line, there was a bit of a miss, and on the margin front, there was a miss of close to around 120 basis points. The key reason should come up for you. Well, volumes appear they were in line. The problem was in the sales mix. That is, they sold a higher amount of clinker, and a higher amount of sales came in from the non-trade segment. Now, that effectively pulls down realizations, and that's why the realizations contracted by close to 9% on a sequential basis, while the street was bracing for a contraction of close to around 5%. To make matters worse, well, the costs continue to remain elevated and the power and fuel cost was sharply higher on a year-on-year basis. That's what resulted in the EBITDA per ton coming at the lowest we've seen in nearly around 28 quarters as per some brokerages, coming in at only around 700 rupees. Remember, in the past year, same quarter last year, it was more than double, close to around 1,420 rupees odd. Brokerages, Morgan Stanley, they trimmed their target price, but they remain overweight because they believe that the company will do well in this cycle, both on realizations as well as on volumes. While Jefferies, they pull back their EBITDA estimates for the next couple of years, and they have a hold rating on the stock. Well, the management joined us and they said that they are expecting volume growth of close to around 10% for the year. They're expecting the EBITDA per ton to improve to around 900 to around 1,000 rupees. And they also clarified that they're not interested in JP Group's assets. Well, let's hear out Mr. Bangur.
Prices will be increasing when the natural demand will come. Right now, it should be after November 15 or so. The demand should be good. First half of the quarter is good monsoon, so that will have the good result in the year end, but not immediately. Immediately, the sales is little affected. Festive season is there. So we expect very good results from mid-November onwards. Right now, the costing also should decrease from December because the old stocks of coal are there with almost everyone. So I expect this quarter to be little better than the last quarter, but January, March should be a good quarter. In the first half, our volume growth is around 13%. So we expect 12 to 13% growth, but a little bit conservative. So I am saying 10%.
Okay, ACC is another one in the cement pack which reported numbers.